Picture this: the mighty US dollar stumbling to multi-day lows as a global risk appetite surges back to life, all while a historic US government shutdown drags on with no end in sight. It's a roller coaster for traders, and if you're into Forex, you won't want to miss what's brewing. But here's where it gets controversial. Is this shutdown really just a political stunt, or could it unravel the entire economic fabric? Stick around, because we're diving into the key events shaping Friday's market moves, and trust me, there's plenty that most people overlook about how these ripples could redefine global finances. On Thursday, the US dollar index, DXY, continued its retreat for the second straight day, pounded by declining yields across the US Treasury curve, worries over the prolonged federal shutdown, and a brighter outlook in the broader risk markets. To put it simply for beginners, the DXY measures the USD's strength against a basket of major currencies, and this drop suggests investors are fleeing the safety of the dollar in favor of riskier assets like stocks or emerging market currencies. Wrapping up the economic docket will be the preliminary University of Michigan Consumer Sentiment Index, a quick snapshot of how American consumers feel about the economy, based on surveys that gauge spending intentions, and the New York Fed's Consumer Inflation Expectations Survey, which tracks what folks anticipate for future price hikes. These are crucial because they can sway Federal Reserve decisions on interest rates. Oh, and don't forget the speeches from Fed officials. Williams, Jefferson, and Miran are set to share their thoughts, potentially offering hints on monetary policy that could either calm or stir the waters. Over in Europe, the euro to US dollar pair soared to fresh multi-day peaks, easily breaking above the 1.1500 level, fueled by the dollar's weakness. For those new to Forex, this means the euro gained ground against the greenback, often a sign of eurozone strength or dollar woes. Germany's balance of trade data is on the horizon. That's the difference between exports and imports, a key indicator of economic health, along with a speech from ECB's Elderson, which could provide insights into European central bank strategies. And this is the part most people miss. With tensions simmering over trade imbalances and Brexit echoes, how Elderson phrases things might spark debates on whether the ECB is too dovish or not hawkish enough. Meanwhile, pound sterling to US dollar charged upward with impressive force, blasting past the 1.3100 mark thanks to the Bank of England's steady approach and the dollar's pullback. To clarify for newcomers, the BOE's steady hand refers to their consistent policies amid inflation pressures, which bolstered sterling. Across the pond, the UK calendar features the Halifax House Price Index, a measure of home price changes that reflects housing market vitality, and the BBA mortgage rate, tracking borrowing costs for home buyers. Imagine if these show cooling prices. It could fuel arguments about whether the UK's housing bubble is finally deflating, a hot topic for economic forecasters. In a week marked by wild swings, US dollar to Japanese yen dipped significantly, slipping back into the territory below 153.00 after Wednesday's strong showing. For beginners, this yen-dollar pair often reacts to Japan's economic data and global risk sentiment. Japan's upcoming releases include the BOJ Summary of Opinions, a compilation of views from Bank of Japan policymakers, and the preliminary coincident and leading economic indexes, which gauge current economic activity and future trends. These could reveal hidden layers of Japan's recovery, perhaps challenging the narrative that the BOJ's policies are outdated in a post-pandemic world. Down under, Australian dollar to US dollar extended its Wednesday bounce, pushing toward levels above the critical 0.6500 resistance on Thursday. Simply put, the Aussie dollar's climb indicates renewed confidence in Australia's exports or commodities. The next big item on Australia's agenda is the balance of trade results, which will show whether the country's export-heavy economy is holding strong against global headwinds. Shifting to commodities, WTI crude oil prices fell for the third consecutive day, dropping under $60 per barrel as market participants weighed fears of a returning supply surplus coupled with softer demand. This decline underscores the delicate balance in energy markets, where geopolitical tensions and economic slowdowns play tug-of-war. But here's where it gets controversial. Are we witnessing the end of the oil boom, or is this just a temporary dip before prices skyrocket again? Finally, gold prices steadied and rose to three-day highs above $4,000 per troy ounce, benefiting from the dollar sell-off and escalating uncertainty around the US shutdown. Silver followed suit, building on its Wednesday advances to near the important $49 per ounce level, or three-day peaks. For those unfamiliar, gold and silver often shine as safe haven assets during turmoil, acting like a hedge against financial chaos. So, what do you think? Is the US shutdown a mere political theater, or a ticking time bomb for global markets? Could the Fed's upcoming comments ignite a fresh debate on inflation control? Share your views in the comments below. Do you agree that these economic indicators are underestimated, or disagree that gold's rise signals deeper instability? Let's discuss.